Hello and welcome to the first of two webinars focusing on the types of fraud that you may be exposed to and some practical steps that you can take to prevent it. My name is Beth Southam. I am a profession support and assurance technical specialist for the finance team. I've worked for the RICS for 4 years and I specialise in the client money protection scheme. In the first of this two-part series, we will be covering your duty to clients, the types of fraud that you may experience, an example of each fraud, and how you can prevent it happening in your business. So your duty to clients is enshrined in Rule 8 of the Rules of Conduct for Firms on the 2nd of March 2020. A firm shall preserve the security of clients' money entrusted to its care in the course of its practice or business. This is expanded on further in the Client Money Handling Professional Statement, which came into force on the 1st of January 2020. So there's 6 types of fraud that we will be looking at today. These are cash, incorrect account details being sent to tenants, fake emails from a principal of the firm, altered supplier invoices, altered account software, and requests to change bank details. So the first fraud area that we are going to look at relates to cash. A lot of firms have mitigated the risk here by not accepting cash. However, we still have an awful lot of firms that do take cash payments. So the example that I have here relates to a tenant coming into the office. They paid part of their rent in cash and they were given a receipt by the firm. When the firm chased the tenant for the remainder of the rent, the tenant claimed that they had paid the full amount. The firm queried this and the tenant came back into the office with a doctored receipt showing that they had paid the full amount. The firm had no evidence that the tenant had paid a partial rent, so they had to put the money into the client account themselves. So there's a few ways that you can mitigate the risk. Where possible, 2 members of staff should count the cash to confirm that the amount is correct. And when it comes to receipts, then you should have a duplicate receipt book, and the receipt should be signed by both the payee and an employee. So one copy is given to the tenant and the other copy is retained in the office. All cash must be stored securely, so in a safe or a locked drawer until it can be paid into the bank. And we strongly recommend that you keep a receipt log where you record all cash and checks that you have received in your office. This should be reconciled to the bank on a regular basis so that you can identify whether there have been any receipts that did not appear on the bank statement. So the next example is a situation where incorrect account details were provided to the tenant. Now in this example, a lettings manager was responsible for the entire lettings process and had no supervision at all. They provided their own bank details to tenants so that tenants were paying their rent into the manager's personal bank account. And they were able to get away with this for quite some time because they were using deposit money to pay landlords, or they were even informing landlords that the tenants were in several months of rent arrears. So to prevent this, a principal or a senior member of staff should have oversight. There should never be one person responsible for an entire area of the business. If possible, ensure that the client account details cannot be altered when they're being supplied to tenants. If you have a standard template and you can lock this down so that the bank details can't be changed, then this would be ideal. You should also have a robust arrears procedure in place so that you chase tenants regularly for their arrears, and if the tenant does say that they have already paid their rent, then you can investigate this straight away. You also should complete regular bank reconciliations, and this is to check that the amount of money that you have in the bank matches what you've got on your software system. And this should include reconciliations of any deposit accounts that you have as well. So fake emails from principals is something that we come across quite regularly. So the example here is an email was received from a principal requesting that funds were transferred to a specific bank account. The person responsible did not check with the principal whether this was a genuine request and made the payment. The procedures that you can put in place to prevent this is to never rely on an email from a principal or a member of staff or even a client to make a payment. If you do get a request, then you should contact the person that is making the request to confirm that it is genuine. And you should not confirm whether it's genuine by email. You should contact them either by phone or by speaking to them in your office. All staff should be trained so that they know how to deal with this situation, so that hopefully this will not occur, and there should be a dual authorization procedure in place. So if one member of staff processes the payment, it will not leave the bank until another member of staff has authorized it. Another very common type of fraud relates to altered supplier invoices. So we've seen several examples of this, but the most common one is where the supplier's system has been hacked and the bank details on their invoices are changed to the fraudster's details. The fraudster will often put a note on the invoice saying, "These are our new bank details, please make all payments to this account in future." So you do need to have procedures in place to prevent this happening. So if you do notice that the bank details on the invoice do not match your records, then you should contact the supplier using the details that you have on your system to confirm whether this is genuine. If you create templates on your online banking, then you should check with your bank whether a notification can be sent every time bank details are altered. Some banks will send either a text message or an email to alert the principal that a change has been made so that you can check this before the money leaves the bank. And if you do keep a separate log of supplier bank account details, such as on a spreadsheet, you should again always confirm that the details match before making any payments out of the account. So the account software being altered is an internal fraud committed by a member of staff, and this really applies where bank details are entered on the client accounting software and these details are uploaded straight to the bank. In this situation, a member of staff was changing the bank details to their own personal bank account, and because the payment was uploaded directly to the bank, the money was paid to the employee. And some safeguards to prevent this happening. If you can, on your software system, lock down the bank details section so that it cannot be altered, or it needs a second person to verify the alteration before it can be made. Having banking controls in place is extremely important. So what you don't want to have is the automatic upload going from your software system to your bank and the payment being made automatically. You should have a control in place so that once the payment is on the bank, somebody has to authorize it. And this is known as dual authorization. Many software systems actually have an audit trail which runs in the background, which can highlight any changes made to account details and will also tell you who has made those changes. So it's worth checking with your software provider to see if this service is available. And clients requesting to change bank details is another quite common fraud area. You may have an email trail with the client where you've been corresponding back and forth, and at the end of that trail, the client tells you, "Actually, I've changed my bank details. Can you pay this amount to these new accounts instead?" In reality, the fraudster had hacked the client's email account and they sent the email with the bank details. This is quite similar to when supplier invoices come in with altered bank details. You cannot assume that the email is genuine just because it has come from the client. You must always contact the client using the details that you hold on your system to confirm whether it is a legitimate request. Do not reply to the email to confirm that, because the fraudster could intercept the email and confirm that the details are correct. You should always contact the client over the phone. If you do have any questions or you want to discuss whether your safeguards are sufficient, please join the RICS Insight community. We have a global regulatory support and assurance group where you can ask questions and a member of the finance team will get back to you. Thank you for attending this webinar, and if you do have any questions, please do get in touch.